Hey, it's Clay Burris with the Burris Realty Group at Century 21 Sheets. We're back for episode 27 of BRGTV. Thanks for joining us. Today we're going to be talking about the mortgage aspects of the purchase agreement. Hey everyone, I'm joined today by Eric McMillan, Area Manager at Fairway Mortgage. Thanks for joining us, Eric.
Thanks for having me, Clay. Good to be back.
Yeah, today we wanted to hit on the mortgage sections of the purchase agreement and kind of get into the financing aspects and what people can expect to go through there. So the first thing that we're going to do on the purchase agreement is kind of tell the seller what type of financing you're planning on doing. So this is one of the reasons it's very important to have that pre-approval done before we start looking for houses so that we know what direction we're going when it's time to write that offer. Now there's some main forms of financing I know, conventional, FHA, VA. Can you tell them a little bit about just the minor differences of those?
Absolutely. Yes, getting pre-approved up front is vital in this market, and Fairway Mortgage takes great pride in being able to stand by our pre-approvals. In terms of the financing, there are of course some niche products, but the primary products that we're going to look at are conventional, FHA, and VA/USDA. Conventional, the norm is a minimum of 5% down payment. Okay, FHA is a government loan. It's a minimum down payment of 3.5%.
That's a little less strict on credit scores, is that right?
Yes, it goes down a little bit lower on credit scores, maybe a little bit higher on debt to income ratios and things of that sort. And then VA loans are for veterans, both active military and veterans who are discharged from the service, and it has a zero down payment requirement. And the last one that we see on a normal basis, I would say, is USDA, and that's rural housing, and it has a zero down payment requirement as well. But there are only certain areas that are eligible for that type of financing.
It's based on the location of the house itself, as well as some other factors.
Exactly.
Okay. So the other part of the purchase agreement pertaining to financing that we wanted to talk about today is actually the time to obtain your mortgage, which I think is one of the most important pieces of choosing a lender, because there are many lending choices out there, but it's not all about rate. Sometimes we got to make sure we're hitting the deadlines that are in the contract and you get closed on time so there aren't issues down the line. So Eric, can you share with us kind of your guys' process? How long does it take from when the buyer says, hey, we've got an accepted purchase agreement? How long does it typically take you guys to get to the closing table?
Well, sure. That's a great question, and you're exactly right. Fairway, we pride ourselves in speed of response and getting deals done as quickly as they're required. So we can close them in the least amount of time allowed by law. But the typical contract is written for 21 to 45 days. I would say 30 days is probably the most common that we see. So in order to close in whatever amount of time, there's a lot of responsibility that goes on you, the buyer, to make sure that you get to your lender everything that is requested in a timely manner. That's going to set the stage for everything else. So if you're working with a good lender, they've set out the program, they know the guidelines, they're telling you what's required. Mm-hmm. Some of the things that are going to be required on pretty much every transaction, you're going to need your last 2 years W-2s. You're going to need your last 2 months bank statements. You're going to need pay stubs covering the last 30 days. You're going to need photo identification. So things of that sort you're going to need on pretty much every transaction. And then if there are different things that are involved in the loan, maybe there's a bankruptcy in the past or a divorce in the past, those are certain one-off things that we have to get. We try to get all those things before you are under contract so that we're ahead of the game once you sign on the dotted line. But it doesn't have to be that way, and once we know that we have a timeline to meet, all systems go.
So having really that pre-approval, going back to that, up front, you can then set the expectations with the buyer of, hey, start collecting those tax returns, the pay stubs, everything that you just mentioned there, so that really once we have that contract in place, you guys are already mostly ready to go, maybe collecting a few more documents and getting the ball rolling towards appraisals and the rest of the loan process.
Correct? Exactly, because something might show up on the tax returns we have to be made aware of up front. But during that time frame, after the contract is written before closing, we have to have an appraisal done. Appraisals in central Indiana are taking roughly 7 to 10 days to get back. Title work has to be ordered. You're working on your homeowner's insurance information. So there are a lot of things behind the scenes that are being done as well. So we want to make sure we are as proactive as possible on the front end so that we hit that closing date for you and your family.
Well, Eric, thanks for joining us today. We really appreciate the information. If one of our viewers wanted to get a hold of you to start that pre-approval process, how would they go about doing that?
Well, thanks for having me again, Clay. And yes, you can easily reach any of our 6 Indianapolis locations at www.indyfairway.com. That's indyfairway.com. And a member of our team would love to assist.